Good morning, everybody. I hope you all had a good weekend and are all looking forward to the week ahead of us. So, if we have a look at what happened last week, we had, with the exception of Japan and Germany, which, as it happens, have been the two markets that have struggled the most this year, we had some positivity across the rest of the board, with the Dow up 1.5%, the Nasdaq was up 1.8%. We saw a slight increase in the FTSE after the big gains of last week of 0.3%. The bundle of four this week would have outdone the Nasdaq, would have had 2.1%. That was based on some good performance from both Amazon and Facebook, which were up 2.7% each. The Nikkei, as I mentioned, was down, and that was down 3.7%. Japan is in a mess. Not only is their market down considerably this year, but also their currency is far too strong for their exports, and somewhere where, as you know, I don't tend to invest in. Shanghai was up 1.9%, and the DAX in Germany was down 1.5% as well. So all in all, pretty positive. Second week in a row, we've seen the major markets that I'm interested in, as far as the American and the British markets, up 2 weeks in a row. On the currency side of things, we saw the US dollar continue to strengthen in most places. Obviously, the pound, the British pound at the moment, is struggling given the Brexit and everything surrounding that, and fell another 2.5% last week to 129. We also saw the US dollar gain against the euro. It's now at 110. We saw a flat Aussie dollar against the US dollar at 132. And the Japanese yen just continues to get stronger, which is not what they want. And that was at 1.9% to 100. It hit the 100 mark. So we may see it this week fall below 100, which isn't good for Japan and the Japanese economy, which, as I said before, isn't in a very good state of play. Clearly, the weak pound is not a nice issue, especially given the timing and the fact that a lot of the kids in the UK are breaking up and lots of people are going on their holidays to Spain and Portugal and these sort of places. You know, the cost of an average family holiday has probably been increased by about £200 to £300, they reckon, which isn't nice, you know, for a lot of people. Unfortunately, that's just what it is. There's certain cash exchanges out there which will give you one-to-one for the euro at the moment, which is, of course, very poor, and highlights how these companies take too big a margin, which I have a solution for, by the way. Anyhow, if we're moving on, we look at what goes on. Last couple of weeks, we've seen a bit of a mini rally. I do think that it may be time to take some profits off of the table, which I have done so myself with certain companies. I think we may see a little bit of a pullback in the next week or two. So I think now may be a good time to take some profits. I know I always talk about the long term, but when you see some positivity, I think there's a few stocks out there now you should realise those profits. It's the easiest thing in the world to do, to realise a share that's at a profit. The more difficult thing to do, of course, is to sell shares at a loss. But that's the difference between, guys out there that are successful and guys that are less so, is that, if you don't want to own something, don't own it. You can't change the past. You've got to look at your position now. I've done the same with Apple myself. I don't think Apple's got much going on in it at the moment. I mentioned before that I think that, if you own it, fine. Don't buy more, keep it. I'm actually trimming Apple now. I'm actually going down. I've sold it some at a loss. You have to do that from time to time. Clearly it's not nice, but at the same time, you need to realise that if you don't want to buy it, you don't want to own it, why hold it? And that's the most difficult thing for most people. So that's important. Property, again. I know it sounds sometimes like I'm blowing my own trumpet when I said the other week that I avoid financials, which I do tend to, and the financials were vulnerable to the Brexit. I did pull a lot of my clients out of property in the last few weeks, not because of the Brexit, because, as I say, I thought that it was going to be a Remain vote, but I just feel that property in general is something which, the death of the high street, more people are shopping online, office space is becoming, premium office space in premium locations is becoming less valuable due to the fact that many people can work from their phones, from their iPads, from anywhere in the world. So I thought pulling out property generally across Europe was probably the way to go. Obviously, this, with hindsight, we've seen quite a lot of property funds fall into a situation where they're not liquid enough now because they've had a lot of selling going on. I would just say if you do hold one of those funds, or it's in your pension or whatever it may be, I wouldn't panic too much. Clearly, any property fund in the world is not going to be super liquid. So just give them time. And companies like Henderson and some of the others that have struggled with the rush of sales in units in their property funds and not been able to liquidate it in time, you're in good hands still there, and things will come good in the long run. So on the sporting front, obviously we saw Andy Murray, fantastic performance, proving that he is a great, doing what he had to do, comfortably winning the final after Nova went out. And of course, Portugal winning the European Championships, which was against the odds again, 10-3. You'd have got on Portugal winning before the game started. And it goes to show once again that, teamwork and a pragmatic approach to the game often shine higher or perform better than the class, which was clearly there in the French team. So congratulations to them. It wasn't the prettiest game of football you'll ever see in your life, but then again, international football at that level rarely is. It's about winning, it's about getting the result, and Portugal did that, and congratulations to the manager and the team for that. So just to finish with a quote for the day, because I know I've gone over. This is from Harold J. Smith, who was a preacher, funny enough. And one of the things he said was, more people would learn from their mistakes if they weren't so busy denying them. So that plays into what I talked about before about, having shares which you no longer want to own. You bought them in good faith, thought they were good. Don't be scared to sell them at a loss, because sometimes you have to. If you don't want to own them today, you may as well not own them. Simple as that. Have a good week. See you later. Bye.